Welcome to this first session for Unit 310 on finance. In this session we're going to examine the role of governance and compliance in finance. So let's have a look at the aims and objectives before we get started. So the aim of this session is to understand finance related governance and compliance. And the objectives for this are to describe the purpose of governance and compliance in finance, identify governance and compliance processes relating to financial reporting, dealing with income, record keeping and audits, and then finally to describe the implications to an organisation of unresolved governance and compliance issues. So let's get started. So what do we mean by financial governance? Well, it's all about the way the organisation collects, manages, monitors and controls financial information. It includes how companies track their financial transactions, manage performance of their finances, control the data, compliance, operations and disclosures. Whereas compliance is more about having measures to guarantee conformity with the laws, policies and formalities that surround it. Obviously, these are basic descriptions and you all have internal organisational guidance, hopefully, which goes into the specific detail for each organisation because it's up to that organisation to decide how they're going to do it. But the purpose is to provide a framework which people in the organisation can operate from within for financial matters. And that ensures they avoid or mitigate against any financial issues. So, governance looks at the way the companies are managed at the highest level, including mechanisms, processes and policies that allow for the smooth allocation and understanding of the rights, authority and responsibilities of the various decision makers for the financial aspects of the business. Whereas compliance ensures businesses are prepared and complying with various standards, laws, regulations, etc., so that they can avoid penalties or sanctions as a result of non-compliance to those laws, regulations. And all of it is about avoiding or mitigating against financial risks. Now, we talked about risks in the last unit on project management, and this is similar. So what sort of risks might there be? Well, the list is endless and it'll depend on the type of organisation, size of organisation and what they're up to, but they can be categorised into three categories really. First, there's the unexpected happens, factory shutdown, cybersecurity incident, as the NHS had, an employer liability claim brought against the company, and you need to know you're going to be able to pay for those major losses. Risks could be identified as part of a risk management strategy, as part of the governance, but it's about ensuring you can cover any losses incurred, knowing what your liability is. Then there's cash flow, running out or losing money, having plans to give the organisation cash infusions when needed while mitigating financial risk at the same time. And then finally, failing to meet regulatory requirements, and the consequences and sanctions could be fines, actions against them by HMRC, tax, VAT, not filing company accounts, failing to report things properly so that the stock market plummets, or issues around those sort of areas. So really, they're the sort of risks that the governance and compliance is trying to mitigate against. And compliance requirements can be internal or external. So internal things could be things such as policies and procedures that state about record keeping, audits, etc. And they're normally driven by external factors that this company needs to comply with as part of the company's transactions, reporting of finances, etc. Things such as entries about all monies received and expended by the company, a record of assets and liabilities of the company, tax and VAT for the company, and employee wages, tax, national insurance, for example. And if the company is involved in selling or buying products, things like statements of stock held by the company at the financial year after you've done stock taking, and statements of the goods sold and purchased, unless they're normal trade and retail. But if there's anything particular in those goods, maybe something that's got trade regulations on it, all that needs to be reported on as well. So internal compliance measures are typically set by the organisational policies and procedures and enforced internally by the company's upper level staff, and most of those are in process for doing the external compliance, which refers to those requirements that are imposed, mandated, obligatory. They're enforced by government or government departments, HRMC for example, and are usually legally binding. So the processes around governance and compliance that exist in your organisation may well differ from other organisations. Places have different functions, they've created different roles to satisfy governance and compliance requirements, and that's all fine. But what governance does is give a framework that should determine how everyone works towards and ensure that the compliance processes are carried out, ensuring things such as that there are adequate processes in place to ensure that all the documents used for financial reporting, the policies, the accounting manuals, cash flow, balance sheets, etc., are all in place. That there is adequate processes in use to effectively track income and expenditure, because if you've got all those documents recorded on but you're not tracking it, then it's not going to be worthwhile. That organisational records are set up and maintained to meet the requirements of the governance and compliance, and that all the employees understand what those records roles are, and to ensure audits are carried out to provide assurances that financial statements are accurate for all stakeholders at different levels. And it's about making sure everybody knows about this and that it's communicated throughout the organisation. And if all those things are not in place and we haven't got sound financial governance or compliance, then issues can arise. The potential consequences of unresolved or poor governance could include errors, which could lead to poor decision making because it could be based on flawed financial information, and it might lead to mistakes. There could be misappropriation, that could be fraud, it could be theft, or it could just be misuse. Unresolved compliance issues could lead to penalties, there could be fines or sanctions, and this can lead to refused finance or issues with finance that you've got with other companies, like invoicing, etc. And then it could affect reputation with the negative publicity, the loss of organisational reputation, decreased revenue, etc., and ultimately the demise of the business. And all of these are because of governance that was not in place to ensure that the processes were there and that ensured that people knew about them internally. They knew about the checks, the balances that were in place, and ultimately this can lead to regulatory sanctions, penalties, and lead to reduced stakeholder confidence in the organisation, impacting on all sorts of things like credit lines, suppliers, sales, lending from banks, partnerships, collaborations. Because external stakeholders will take action in response to poor or unresolved governance compliance issues. We've outlined some, and for small companies they can be catastrophic. In recent years we've seen some big companies have problems. Tesco's false accounting scandal was a major one in 2014. They were big enough to survive. It would have crippled many companies, but for those who don't remember, Tesco's overstated their profits by 326 million, leading to investors being affected because the share price plummeted, the reputation was damaged, and they faced fines and costs of around 235 million. Financial Conduct Authority and the Serious Fraud Office investigated them, took them to court. Actions are still ongoing, and recently they've just had to pay out some more money. So even 2017, 2018, it's still having an impact on them. So financial governance and compliance is really important. So, quick recap before we do an activity. Our main aim was to understand finance-related governance and compliance, and the objectives were to describe the purpose of governance and compliance in finance, and we've talked about that from the beginning. Identify governance and compliance processes relating to financial reporting, dealing with income, record keeping and audits. And we've highlighted those areas, but in the activity that you're going to do after this, you're going to be asked to look at your organisation and try and see what you've got in place, and then describe the implications to an organisation of unresolved governance and compliance issues. And we just talked about some of those and the ideas and the sorts of things that it can affect. So all the activities for this unit are part of your assessment. So your assessor will be looking at them and deciding whether you've given enough information to show that you've got the knowledge required for these units, and giving you feedback. And this activity is another Word document. You download it and it comes in 3 parts. The first part gives you some brief scenarios of poor governance compliance issues and asks you to describe an implication for the organisation if it's left unresolved and not sorted. So it's not asking you to list what's going to happen, like they might get a fine, but describe it. What would it look like? What might happen? It then asks you to describe the purpose of both governance and compliance. So that's describing the purpose of it, not what they are. And finally, it asks you to look at your own organisation and identify some processes around financial governance compliance relating to the ones we talked about: financial reporting, dealing with income, record keeping, audits. So you're going to have to research within your organisation and find what policies, procedures and processes there are that support those areas. So complete your activity, upload it, and then you can move on to the next session in this unit.